1,000% gains for many of the cryptocurrencies are still yet to come, and you're right here in the right place at the right time, with Bitcoin still pushing up towards that $69,000 level, and it's only a matter of time until Bitcoin starts to break back into new all-time highs, and we're waiting for that fifth and final leg up within this crypto cycle. So stay tuned till the very end of the show. We're going to outline some of the top potential coins which could be candidates for those 1,000% gains. Make sure that you smash the like button, hit the bell notification, and subscribe to the channel, and we'll get straight into it. So of course, on the hourly time frame over here on the Banter Bubbles chart, a lot of the coins are showing some weakness over here, looking red, but the market's also showing its hand with where they want to place their bets first for the top trending coins, and they are meme coins, right? So again, PEPE, FLOKI over there with first coins to turn around on the hourly, and that's a very, very telltale sign. If you look at the daily over here, you're seeing the exact same thing, right? PEPE, BONK, we have FLOKI over here, 𝗕𝗬𝗕𝗓. So meme coins continuing to show signs of strength. Let's have a look at the weekly, and the weekly is no different, right? With meme coins as top performers, FLOKI over there, and this is only looking at the top 100. Remember, you can toggle through and you can look at the other coins within the ecosystems to see which ones are performing best. So if we go onto the actual meme coin ecosystem, then this is the outlook, right? Let's have a look on the hourly, which ones are bouncing first. The political fire ones, right? So TREMP is up over there. We also have POPCAT, 𝗕𝗬𝗕𝗏, 𝗕𝗬𝗕𝗏. So let's have a look. Let's see what today's show is going to be all about. But first and foremost, I do want to focus on Bitcoin. And I think there's a lot of confusion within the market right now, whether it is bullish or bearish, right? So surprise, surprise, a lot of people always struggle to identify the trend of the market. And when in doubt, you need to zoom out. So when you zoom out, this is your 3-month time frame. You can see the clear bullish demand over there, sending price towards the upside. And we can very quickly just mark off some levels. If you look at this as a very key level over here, why? Well, because you have the 3-month candles close over there. You had the next open. You had failure to get above, which set the all-time high over there. Price came down. And now you have a big bullish candle, which has pushed through that level. And then you've come back down, testing that level of support and pushing back above that level. So we'll make it nice and big. That's coming in at $58,000 as a pretty key and significant level. I think it's also probably noteworthy to mark off these wicks over here. You can see there's been a lot of interest within this zone, and then we'll go on to the lower time frame. So if you go into the monthly time frame, this is what you're seeing, right? Price is still capped and closing above those levels. Where do things get mega bearish? Well, below $58,000, where we pretty much wicked into that zone, held that as support and continued towards the upside for Bitcoin. So all in all, that's looking good. Now, when you have a consolidation at a very key level, which is what you're seeing over here, whether this is to the up or the downside, the theory works out to be exactly the same, and that creates what you would call an order block, right? So in this region over here, you can see Bitcoin is creating an order block. Order blocks generally lead into the next major expansive move. We can also see this and find supporting evidence by looking at the volatility, right? When volatility is low in that environment, then of course that means that you're going to have usually big moves and continuation onwards and upwards. And we've seen this within the prior cycles, right? The prior cycles that have had consolidations have also led into pretty substantial moves towards the upside. And I'll go through some of those when we're pressing up to all-time highs. But here's just one example, right? There's one example. That consolidation leads into a pretty enormous move towards the upside. So all in all, I would say that this is actually still very, very, very bullish on the high time frame, and we are looking for continuation higher. And if you look at the weekly time frames on both Bitcoin and ETH, this is the current situation, right? So as Matthew says over here, we have bullish divergence for Bitcoin. We have weekly bullish divergence for Ethereum. We have weekly bullish divergence for total 2, which is all the altcoins plus Ethereum over there. So it's taking the full cryptocurrency market cap and subtracting Bitcoin from it. We have Bitcoin dominance also showing weekly bearish divergence. It is happening. Or is it happening? is the question, right? You can rephrase that exclamation mark or question mark. It's up to you. So I'll pose the question to you guys. If we are going higher, where do you think Bitcoin will top out the cycle? There's a poll below. If you look in the comment section, please cast your vote over there. Do you think we're going to top out at $88,000, $100,000, $145,000, or more than $145,000? I'd love to know from you guys at home, the viewer. Let me know what your thoughts are. Where do we top out? Because at the end of the day, there is still the possibility that it is a left translated cycle and that we're going to top out sooner, right, within this cycle. And it's not going to last all the way and be a long cycle into 2025. So we need to gauge price action and momentum as it unfolds. And currently, this is the situation, right? So as I've just shown you, we are creating that order block, which generally leads to the next big move up. We've broken outside of the range. That's the orange level on the top is your range high. And now we've broken into the area where bulls usually start to gain control, which is the yellow marked off zone. How did I get to that level? Well, ultimately, if you focus at the top candles over here down to the bottom candles and you simply mark off the 50% level, it comes into this zone, which is pretty much the prior highs, which cap price towards the downside in the previous cycle, which means if you're above that 50% level, that's where bulls begin to take control. So I know, although this is a messy chart, really what it means is this zone over here. This is the area. As long as bulls keep price action within that zone, the probability is that they're going to consolidate into this region and lead to a pretty explosive move towards the upside. And consequently, for that reason, my bias remains long. Don't you love it that on this channel, I'll just tell you it as it is? Let me know in the comments if you appreciate that. I watch a lot of other YouTubers as well to gauge what the sentiment is within the market. And oftentimes, they dabble and dance around the main topics and they never really give where their bias is. Are they bullish? Are they bearish? You're left guessing at the end of the show with absolutely no clue which way price is going to go. I'm telling you straight up, that's what I think. That's my bias. My bias is bullish. Stochastic RSI is now officially starting to push above the 20 mark over here, which is that dotted line that's running horizontally across the screen. And that shows you where bulls start to take control, right? So therefore, we're building up pretty behemoth long positions. We also had a look at the timing cycles for the corrections, right? How long have these corrections lasted from and how far did they draw down, right? So from the peak down to the bottom within this cycle, we've currently had 5 corrections and we're in the 5th correction. And then how long did it take before you broke into new highs, thus confirming the end of that correction? Well, this is the statistics over here. I'm not going to go through each one in detail, but ultimately I've summarized it on the top over here. Here's your correction in price and time. So far, the first one was 22.79% from top to bottom, 29 days before you broke to new highs. 20.31% down was the second correction, and it took 70 days before you broke to new highs. 22.1% down on the third correction, and that was the longest one with 102 days before you broke up to new all-time highs. Well, not all-time highs, but new highs within that cycle. The fourth correction was 21.79%, and it took 30 days, so 1 month, to get to the top, right? The fifth correction is the one that we've currently been in, and you can see that's been 23.51% from top to bottom over here of this wick. And currently, timing wise, we're also on the longer end. This would be the second longest within this cycle, which is 74 days, right? 74 days. Now, if we were to extend this on to, of course, be one of the longer corrections, it would go to that vertical line that I've printed over there, which is going to be the 24th of June. So you expect by the 24th of June, Bitcoin should already be reclaiming and trending up here towards new highs. Now, why is this significant? Why do we even look at the timing? Well, it's significant because this shows us how long we can expect this consolidation within this overall order block before leading to the next expansive move. It's significant because we know that consolidations at highs lead to pretty substantial upside moves. And it's significant because we have historical data to look at, which is, if you look at this over here, the prior order blocks, which led to the new highs. This was 2013. Ultimately, how long were we within that region for, right? How long were we in that region region for? Well, if you look from Don Crypto Trades, he says in 2013, we consolidated here for 13 weeks, and then look at what happened next. In 2017, we consolidated for only 4 weeks, and then look at what happened next, right? Then you lead to the next leg up. So it's very important because, as you can see, it means that the market cycle could top out sooner than many of us believe, because from this point to this point over here, or from this point to this point, it went parabolic. Timing wise, it didn't last that much longer. So now is the time to pay attention and get your wits about yourself so that you can make that life-changing money, right? This cycle is like the Olympics. It only comes around every 4 years. You are an Olympic athlete. You sit at home training, waiting for this opportunity to make the life-changing gains. You need to show up to the gym every single day. Don't drop the ball. Don't get complacent. You can see the complacency is there in the market. The views have dropped off significantly as the volume has declined within the market, but prices continue to grind towards the upside. And ultimately, the majority of retail are going to come back when we are ready in this phase over here, and they'll make money, but they won't keep it. That's the thing. They will jump in and prices will go parabolic, or like this section over here, and they'll be in the market for 3 or 4 weeks thinking, now I should start to quit my job because this is easy. This is too easy. And then you know what comes next, and it's over, right? They lose all of their money. So please, please, please don't let that be you. With that being said, we have increasing evidence over here that we're within this tight consolidative phase that should lead to the next move up, and that's the BBWP, the Bollinger Bands contracting in towards one another, shows low volatility, right? Low volatility over here, and we're looking for volatility to expand. We have inflows which, when smoothed out, so you don't have the chop and the noise of what's happening with the ETFs day in and down, but you rather put it onto a 30-day scale where it smooths out the data. Well, ultimately, this is what we're looking at, right? So far, the histogram is trending towards the upside, showing you that there is actually more money coming in than not. We have Bitcoin currently caught right at that pivot level. We are above the mid-range. We're above the 9 and the 18 exponential moving average, which is the yellow and the pink one. We're also above the 200 EMA on both the 4-hour and the 1-hour time frame, and consequently, we're just patiently waiting for price action to make its next leg up above these range highs. And then that's the question, right? Do we hold above the range high? If we do, well, then you know that you can go back to these charts. You are playing out the order block, and it's an actual real breakout. So you don't want to fade the next breakout, right? You want to pay attention to make sure that it is actually, in fact, a real breakout, and you can confirm that. You can confirm that by looking at the lower time frames, right? How do you confirm it? Well, very, very simply, you should see price gain acceptance and hold above $74,000. If you do, stop losses go below that, and you're looking for major expansion. If you do break below, well, that's a deviation. Then you might come all the way back down to the mid-range, which is anyway about the same level. And then you'll probably have continuation higher. And then you can see or view it like this. When you look at the chart, all that would mean is that it's anyway just another high low in the making, right? So that's, I'm trying to think forward. I'm trying to think ahead because we don't know what happens on the right-hand side of the chart. It's not guarantees. It's only probabilities, right? We're trying to predict based on the probabilities of what may actually come next. So that's the viewpoint for Bitcoin, right? And that would be just like every other consolidation, right? Consolidate and then eventually break out the top side of the range. And as you can see over here, you don't have that much time, right? If you gain acceptance, it moves very quickly into the next leg. And that's happened with each of the major corrections, right? So here's the other corrections over here. Let's just change that to yellow. There we have it. Here's the other correction. So once you start to break out of this zone, then look at that, straight up, and it just continues to grind towards the next zone, and then you keep consolidating. Also, with that being said, as I mentioned, we're in the 5th major correction of this cycle. Most cycles present 7 corrections before you lead into the blow off top, which does indicate that, you know, maybe this cycle will top out sooner than later, right? So this is something I'm paying attention to in the event. Now, what am I going to do? Because at the moment, I do have a relatively diversified portfolio leading into the next leg up. So if this is going to be a left translated cycle, what I'm probably going to do is I'm going to start to consolidate a lot of those positions. Let's say I have 15 or 20 different positions on the table. I'm going to start consolidating them into 3 or 4. whatever those coins may be, let's say maybe RUNE, Solana, ETH, and Bitcoin. Just as a random example, maybe I'll choose 4 coins, stick with those 4 coins, and then in the event that it is a left translated cycle and we have some sort of a parabola blow off top, I can quickly exit and cut those positions with ease. This theory is fully covered in WELSH School, by the way, of how I manage the portfolio, when to have an expansive portfolio or diversified portfolio, and when to have a concentrated portfolio. Go through to the link in the description below. You have 2 days and 6 hours and 56 minutes left in order to sign up. This is a $3,000 course, but if you sign up now, it is free, right? Because you're going to be covered by the sponsors below. They're covering the cost of this course for you. So please go through, sign up. Now, if we look at the liquidation levels on high block capital, this ultimately marks off the range levels. So the same way that I've just shown you on the daily time frame, and we view this over here where it's labeled as a range low, that deviation or sweep of the range low was essentially this candle over here, which took the liquidity, right? Now you can see there's quite a bit of liquidity on the upside, which price will start to gravitate towards or move towards like a magnet. So that's what we're watching next. We have Bitcoin hash rate moving towards the upside. Price tends to follow hash rate. This is always what came first scenario, the chicken or the egg, right? Does price go up and then hash rate follow? Or does hash rate go up and then price follow? Well, that's a tough question, but at the end of the day, if hash rate's going up, you expect price will catch up and follow the hash rate. So this signal has a 100% hit rate. This is from 𝗕𝗢𝗕𝗢𝗕𝗏. I'll explain it very, very quickly to you. And the reason I'm bringing it up is just to gauge, are we in the overheated territory where we're at the end of the cycle already, or do we still have more time? Well, it's the net unrealized profits and losses, right? So if you look at the net unrealized profit and loss indicator on the bottom over here, when you're in that capitulation zone, which is the green zone, that's where all the major bottoms are found, right? When you push deep into the red over there, or even just tag near the red, well, then you're in the euphoria zone where the market's going absolutely ballistic, and that's where you want to be more cautious. Remember the 80-20 principle, the Pareto effect. Now, as this moves towards the euphoria zone, that's where the Pareto principle will really come into effect, where the final 20% of the move will bring 80% of all of the gains that you see within your crypto portfolio. But it's time to pay attention because we are nearing that, right? If you go look there, we are getting close. We're currently hovering around that 50 to 60% zone. When we start approaching the 75 to 80% zone, that is where you want to be careful, right? That's where you want to start considering concentrating your portfolio. But more on that in WELSH School. Go through to WELSH School if you want more about that. So with that being said, let's move on. You're also seeing from good analysts that have pretty much nailed a lot of the moves over here. Heinrich, he says that the Piper-Sandler rule has correctly forecasted every single recession since 1940s, right? And it's just fired off another signal. Now, this could be off by a couple of months, right? It uses the 3-month simple moving average. When it rises above a certain level from 12 months earlier, that fires the recession signal, right? So we've now had the 12 months later where the 3-month simple moving average has crossed above that level, and therefore that fires off the recession indicator. Now, the market can remain irrational longer than you can remain solvent when you're trading against the trend. So what I have to say about this is just be mentally prepared in the event that this is a shorter cycle. Then this is something I want to keep in the back of my toolbox just in case I need to pull it out. I'll remember that it's something that's useful, but at the end of the day, we stick with the trend, we follow the trend until we see signs of real froth. And we haven't seen those signs yet, right? Because just a couple of days ago, we had negative funding over here. When you look at the aggregate funding rate, it went negative. We're currently sitting at 0.0127, which is incredibly low, right? If you go back to the prior all-time highs, this is how high the funding gets, right? Now, the funding is really an indicator of dumb money and retail coming into the market and longing near the top. Now, as you can see, if I mark this level off over here, we absolutely nowhere close to that, right? Nowhere close to those extreme levels. Let's just get that off over there on the funding rate. So there it is. That's the funding rates. Let's pull that down a bit. You can see there, it's still got a lot and a long way to go to get into that region. So coming off negative funding rates within that corrective phase, as we showed over here on this chart, you can see, well, that showed a strong buying opportunity. So all in all, that's looking good. We also have in the shorter term, this is really looking at the day-to-day basis for crypto. The cumulative liquidation delta has been relatively negative, once again marking the exact bottom, and now we're waiting for that to flip positive while simultaneously price moves into the top of the range high, and then we can reassess from that point onwards. You can also see the funding rate heat map over here is also green and blue. What that means is most people are too scared to go long. Retail go long when it's yellow and orange. That's too late. You don't want to be going long in that environment. So if we go onto the daily over here, just to switch over, you can see even coins like ENA, negative 53.52% on the funding over here. Ondo is one that's starting to turn positive over here at 59%. And then the rest of the coins over here are neutral. So that tells me that's the environment where I'm starting to look to build long positions on leverage. And that's when I want to put more risk on the table. I don't want to be putting more risk on the table when it feels comfortable and it feels like we're breaking out. I want to put more risk on the table when nobody else wants to put risk on the table. So you can also see over here, Marty Party says that the US Treasury will start buying back bonds this week, right? This means that they'll buy them back from the bond market before their maturity. They do this by creating new money called quantitative easing. They always wrap this in different words and terminologies, and the Fed is a very, very confusing place when it comes to language and accounting, right? It's always sleight of hand, and they're trying to confuse you and leave you behind. They're not going to put up posters that says, buy Bitcoin now, quantitative easing has begun. You know that guy that always holds a sign up that says there's all different things. They meme that sign, something like that. It's not going to be like Fed printing buy Bitcoin now. They're not going to do something like that. But this is it. This is it. This is the document. It's telling you that that's what they're going to do, right? By buying back those US Treasury bonds, effectively, they're stopping quantitative tightening and beginning quantitative easing, which means a massive inflow of money is coming into the market. And chart-wise, we brought up multiple times looking at the M2 money supply, which is increasing towards the upside, and therefore, number goes up. Essentially, that's all that you need to know. That means you expect the DXY, the dollar index, to start to break down. This is the DXY, which has been range bound, right, for quite some time. You had a big move over the top side, and now we're looking at the potential deviation. That's your higher time frame viewpoint. If you zoom into the current price action and what's happening over here, it is tracking currently a couple of higher lows, and it has this trend line over here. Pay attention, watch this level. This is the zone we want to break below. If we start to break below this because of the QE or the quantitative easing, and you get under this zone over here, that gives you additional confluence and full confirmation that the dollar is probably going to go into quite a substantial breakdown, and that will create that next parabolic phase for crypto. ETH, BTC, and Ethereum USD is finally doing something different and looking very, very good. So that's it. We hit the fair value gap. It looks like the move is in action over here. The move is taking place. There it is. We hit the fair value gap, the inefficiency candle. Ultimately, Ethereum has been range bound within these zones over here. Let's quickly pull this up. So there's the range levels. It's been downtrending for a very long period of time. You can imagine the pent-up liquidity over here, right? When you see a chart like that, the pent-up liquidity, that can lead to those big spikes towards the upside. We said you want to wait for full confirmation. What was full confirmation? Well, the reclaim of this white line over here, which you can see has officially been done. What is that white line? 0.0557. You've now reclaimed that, and that's showing you that ETH is going to start to outperforming. We obviously have a lot of PTSD from Ethereum, so you probably want to wait even further, right? And if you do want to wait for longer, then eventually there'll be some sort of pullback. Even if it goes crazy like that, eventually you'll get some sort of a throwback, and then I'd be more inclined to bid that with my stop losses below this region over here. At the moment, I'm still currently holding an ETH position position anyway because ETH USD has done okay, right? ETH USD has done okay. The first ETH positions that we picked up were down here in this region over here on the trend line at just above $1,000. We then loaded up a little bit more over here at about $1,500 because it was in an ascending triangle, which you can work out a measured move from the base of the triangle to the equal highs over here, and that hit the measured move coming into the mid-range, right? You can view over here, this is the predominant range, right? So that being the range high, that being the mid-range, and the white line being the range low. Ultimately, you're now back above the mid-range, so any pullbacks into this region on the USD pair, which would be as low as $3,400, become an incredibly strong buying opportunity. We did look at ETH on the lower time frames, which I'll bring up soon when we get to that section on the altcoins, and I'll show you how it did hit the fair value gap. And we spoke about, let's just go to it right now. We spoke about how deep could it go, right? So here it is. This is it. This is what we're looking at. This is ETH. Here's your fair value gap on the yellow zone over here. And we said you might see just a shallow pullback. That's why you want to scale into the position. Yes, it could go deep like that, but it also might only go shallow, and therefore you want to scale those orders in. Now it looks like we're following the yellow trajectory where we just had a shallow dip into there, consolidate, and continue onwards and upwards. If I delete this over here and we look at ETH, and you can see the break of that downsloping trend line, and we run this horizontal over here, which as you can see was resistance, 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 boom, support. Officially flipping that level into support. That means theoretically any longs that you're taking, you could have something like this. There you go on your longs. Let's say you got in on that candle over there. Stops now go below that wick, and then you can use a fib extension tool to target your next level, or you can simply just look at this, which is going to be 4,700, which is going to be the range highs, right? The range highs over there on a more macro scale. That would be an example of the trade setup for Ethereum. So now that we have that out the way, let's see what else we have. We have, guys, if you enjoy the show, please smash the like button. It really, really helps to get the show content out there. And then another big thing that I have to announce is that from the 1st of June, which is a couple of days away, I'm going to be on Banter Plus, right? Banter Plus. So I'm going to be on that channel. If you come here and I'm not here, don't be surprised because I'm moving to Banter Plus for a while. So please go to the Banter Plus channel as well and subscribe. Now, if you look at the Bitcoin dominance over here, rising wedge formation, which is typically a bearish formation. We've spoken about, though, that chart patterns come further down the priority list. When we do our analysis, certain things matter more than other things. Horizontals matter more than chart patterns. Trends matter more than chart patterns, right? So if the trend's up, it's more important that you're bullish than bearish, right? Even if a chart pattern is a bearish chart pattern, the trend is more important than the chart pattern, right? High time frame moving averages are more important than the chart pattern. Therefore, you have three things going for the bulls in terms of the Bitcoin dominance, meaning Bitcoin dominance should go up higher, and one thing going for the bears. But I also have the ability and foresight to identify when those priorities might start to diminish and come to the end. And that time is now, because we're seeing signs of strength in ETH BTC. We know that Bitcoin's consolidating at highs, and when you start to break out to new highs, that's when things begin to go parabolic, and that's where altcoins start to outperform, and that's where you expect the Bitcoin dominance chart to break down. So it's not over yet, but this is why I've gone from the weekly time frame onto the daily to look at a lower time frame to show you the notable changes that are taking place. You're starting to get a shift in structure, right? It's changing. Look with your own eyes. There it shows over there. The highs, we wicked into the top over there of the rising wedge trend line over there. Pivot level rejected. We came down, we created a new swing low, right? Not high highs and high lows anymore. Lower low, bounced up, lower high, came down. We about to confirm daily closes on a lower low. That means you have two lower lows and two lower highs, and you're starting to break out of the wedge over here, and you're losing the mid-range, right? If you look at the range levels, focus on the orange line over here, this. Now, the midpoint of that is just above here at about 54, 55%. We're breaking below that level. So the momentum is beginning to shift, which means that you need to look for strong altcoins, right? That's one reason why I'm in that altcoin trade, which I'll bring up in a moment. You can see that total 3 as well is adding pressure here for the bulls. The bulls are adding pressure on total 3, looking to consolidate into the sign of strength region, and that should lead to a breakout. Maybe you get, if you're lucky, you get a back test into the top side of the range, and then we're looking for expansion higher in line with things like the BBWP. As the BBWP goes up, we expect that total 3 will also break with that, right? So therefore, I'm in the long position. This is a $500,000 long trade, give or take $457,000. My head's in the way. There it is over there. $457,000 long position. We up $15,000 right now, but we really want to trade this into a multi-million-dollar trade. Higher highs and higher lows. RUNE is one of our top picks for the bull run, just because of what it does from a utility standpoint and a technological standpoint, but there is resistance that we need to break through. Remember, I spoke earlier about the order blocks. There you go. Order blocks are hard to reclaim when you have those consolidations that lead to the next move down. That's the resistance zone. We need to see this push, get above, hold that as support, and then we're off to the races. Then we'll have continuation. Once we clear this level over here, that's probably when I'll start to look to scale this trade up even bigger. So if you want to participate in that journey, stay till the end of the show, stay till the end of the bull run, smash the like button. Let me know in the comments what you think of this trade as well. And then also use the link below, right? If you sign up over here to Bybit, time is officially running out. There is going to be, in 4 days' time, a massive gummy airdrop. So what they did is they allocated $2.25 million worth of tokens. That's the value of the tokens. And those will be divided up by anyone who signs up, right? So for example, if only a few people have signed up, well, then it's, let's say there were 2 people that signed up, you'd each get $1.1 million. Obviously, it's not 2 people. There's going to be much more than that. But I think the airdrop will be pretty substantial. Now, use that, use the link below, register, sign up, and then you can also take that trade with me. So that's one thing. This is the RUNE trade, right? This is the RUNE trade over here. That's the risk to reward. I will look to eliminate the risk at some point. I want to give it a little bit more time over here, but ultimately we scaled in 10 different orders from top to bottom over here. So average entry would obviously be somewhere there in the middle at about $6.20, right? $6.20. And then we're looking for continuation higher. We're targeting the previous month's high, right? The previous month's high. So we can get into some of the altcoins, because I guess that is the title of the show. These coins will moon, right? These coins will moon. Well, which coins are they? I think it's still stuck within the meme sector. Now that we've seen Donald Trump's hand that he's going to use this as part of his political campaign. If you haven't seen the video, just go anywhere on YouTube or Twitter. Long story short, Trump vowed that if the crypto people gave the 50 million US crypto holders provided their vote to him, that he would make sure there's absolutely zero chance of ever having a central based digital currency, so CBDC. And on top of that, he said that he'll make sure he keeps Elizabeth Warren and her goons away from your Bitcoins. So if you don't want their hands on your little Bitcoins, then you vote Trump. But I guess, of course, this is politician talk. Can you actually believe him? I don't know. Anyway, I'll let you be the judge. At the end of the day, I think the Trump coins will run. So what are the Trump coins? Well, MAGA Trump, we've already seen it. Look at that substantial move. Unbelievable. We spoke about this being the range low over here. Unfortunately, we got no back test and sweep into that region. As soon as he made that video with those words, big move towards the upside over there, right? So that is for MAGA. The other ones that you can look at are some of the smaller ones, right? So you can go through over here. You can look at TREMP. TREMP is the other one. Okay, if you look at TREMP, now this one's only $106 million market cap. So very undervalued compared to those. Now, currently, I would say that you are theoretically right there at support, because that is going to be your range high, right? That is your range high level. So let's see. I don't actually hold any yet, full disclosure, but I do think I should probably buy some. The other one, I see you guys in the chat over there, CONAN, right? So we can go to CONAN. Who the hell is CONAN? CONAN is supposedly Trump's dog. So this is a very patriotic dog by the name of CONAN. There he is. There you go. CONAN is with Trump. So, I mean, you do you, but there it is. This is the chart over here. It's not too bad. It looks similar to the Tucker chart, right? You had a big move up. you created a little bit of a range level over there, you deviated back into the range, came to the range low, held that level, and started to move towards the upside. So these are some of the political FI coins that we have. BODEN, I mean, if only you could short this one, because I rate that most of the market would long Trump, short BODEN. BODEN's not looking too hot. The unfortunate thing is, this coin is meant to be to make fun of BODEN, but at the end of the day, when people buy this, they think that they're supporting BODEN or Biden. So therefore, they probably don't want to buy it. So I actually don't think this coin is going to perform. I think you're better off sticking with the TREMPs, right? There's PELOOSI, the insider trader, also one of the political figures over there. We have, of course, 𝗕𝗅𝗘𝗡𝗧. So as I mentioned, similar to that other chart that we just looked at, the dog, what's his name over there again? CONAN. Similar to CONAN, you had the big move up, range levels. This is going to be a key level to hold at the range lows at 0.0357. Meme coins in general, I think will do well, right? Meme coins in general. So let's just see if there's any other ones over here that are noteworthy. We know PEPE has flexed extreme relative strength, pushing up to new highs. A lot of the market will start to position looking for laggards, right? Even WOJACK, right? WOJACK, who even knows what WOJACK is, but yet there it is, pumping to new highs. It's looking good. When the cat, right? When the cat and when the moon. Well, this has come into the key support. That's the area where we said we'd be looking to allocate a strong zone over there, looking for price to move up. WELSH is the meme coin on Bitcoin. I guess people aren't too hyped about memes on Bitcoin. So far, the lot lines are playing out. We said possible sweep down into the 0.0000855 level, and then maybe a big move up from that point. What else? What else is moving at FLOKI? So the old school meme coins are starting to move as well. You have a range high coming in at 29917. How's WIF doing? Okay, WIF consolidating at these lows. No guarantee that you'll get the sweep of the lows, right? We said the closer you can get entries in at these lows, the better. But we do expect another move for WIF. I don't believe that WIF is over, right? If you look at this over here, so far, what do you see, right? One big move up, consolidation. Usually you get another big move up, consolidation, and then the third and the final leg. So important to watch that. Going back here, I see you guys mentioning in the chat, of course, PEPECOIN. This is the OG original PEPECOIN. We're looking to close the gap. Between this and the fake PEPECOIN, we went long over here on this wick, so you're up substantially. If you were watching the show, you're in the Discord, 105% up, right? Based AI, which trades in alignment with that. Same thing. We bought it over here in the support level, consolidating ever so slightly, and then we're looking for the next major leg up. MOG is another one to look at. Okay, let's see MOG. Okay, range highs. This is going to be your range highs over here. So you've already started to break out. I wouldn't chase this. I'd wait for cool off 1109. 1109 are the last couple of digits. So let me know in the comments which other ones you want. While I wait for those to come up in the comment section, we'll chart some of those coins. Just a reminder, guys, 2 hours, 6 hours left. 2 hours, 6 hours. Please speak English, sir. 2 days and 6 hours left to join Whale School. We begin this Wednesday. Also, for those of you that are from the US, happy Memorial Day, or I guess condolences to anyone that lost family. But it is Memorial Day, meaning stock markets are going to be closed. So expect that. We're going to have weekend price action. It's not necessarily, if you're a day trader, the day to trade crypto, because you're going to have lack of liquidity and lack of direction. The market's going to bob and pop around. Maybe that's one reason also that the viewers were a little bit less today, because the US market, it is Memorial Day. Let's also bring up the poll section before we go into those other coins. Okay, where do you think Bitcoin will top out this cycle? So this is 88,000, 100,000, 145. I'm going to predict, I think it would be somewhere between 100 and 145. So I'm going to be the conservative and go with 100. 20% of you said 88,000. We have 23% of you said 100,000. 145,000 was 29%, and 28% of you believe over 145,000. So pretty even splits actually between all of those different options. Now, guys, go through to this exact link, by the way, Please don't Google this because there are some nefarious actors out there who have put up false sites which are trying to mine your data and steal your information. So if you are going to join Whale School, click that exact link in the description. So from the top, that's 1, 2, 3. Third from the top, Whale School over there will bring you to this page. Sign up immediately. Time is running out and the school is filling, right? So let's go through chart requests. What do we have? Chart requests. So BONK, you guys said BONK. Let's have a look at BONK. I know BONK, and let's look at POPCAT as well. How's POPCAT doing? Okay, middle of nowhere for POPCAT. Range lows are all the way at the bottom over there. So still waiting for a move. And then the other one that you just asked for was BONK. Do I have BONK on here? Yes, I do. Okay. BONK pushing up into range highs over there. Will we get the eventual breakout? Last time we were looking for a breakout over there and it failed at that resistance level, coming back down over there. So that's the zone, right? Consolidations into these levels usually lead to big moves. And currently, to tell you the truth, that's exactly what you're seeing, right? Price floating up like this into this resistance level. It's most likely not going to react like this. This is what I always talk about, right? It depends on how you approach a level. If you approach a level like this with straight vertical into resistance, then you expect a reaction, right? Same over here, pulls back, pushes up, reaction, rejects. But when you grind into a level like this, that leads to those big moves, right? Big explosive moves. So I'm more inclined to believe that BONK is probably going to break out. I know there's that guy that's still holding those multi-million-dollar positions over here on BONK. So we'll see how that fares out. There's your pivot level. So we'll mark that off maybe as an area of interest. If you get an explosive move, watch out for resistance between 614,000 up to about 650,000. That is going to be some of the resistance zones. Okay, Doge. How's Doge doing? No one's interested in Doge yet. Doge is kind of underperformed. I'd really focus on the newer, stronger meme coins. But you asked the question, how's Doge doing? It's in the middle of nowhere. I'd only be interested to pick it up at the bottom of the range lows over there, or the breakout and retest of the range high, and then you can look for prices to move higher. So that's it from me, folks. I'll see you all on the next one. I hope you all have a good Memorial Day for the US citizens. And for the rest of you, I'll see you all tomorrow. Cheers for now.